So we start with our session. We are in customs right now, right? So the first question, with reference to drawback on re-export of duty paid imported goods under section 74 of the Customs Act, answer in brief the following questions. So this question is all about duty drawback, right? So first we'll discuss the provisions and we'll come to the answers, right? So the first question, there are three parts of this question. The first question is, what is the time limit for re-exportation of goods as such? Next, what is the rate of duty drawback if the goods are exported without use? Third question is, duty drawback allowed on re-export of wearing apparel without use. See, duty drawback, we have already discussed these concepts during our session recordings, right? So section 74, section 75, 74 is all about that you import something and then you export. 74.1 says without use. 74.2 says that you use it and then send it back. So let's say example, if I import some goods and I use it and send it back for a proper place, let's say 3 months, for 6 months, for 1 year, for 8 months, whatever period. Section 75 talks about that you import certain products, you manufacture a finished product and then you export it back. So what drawback you get? This drawback is basically to promote exports out of the country, right? And in case of section 74, if you see, genuinely you imported certain goods, but you have to export it back. Then what import duties I paid, I should be allowed it back, right? Because I'm not using in India and I'm sending it back outside India, right? So let's go to the first question. What is the time limit for re-exportation of goods as such? So this question is on section 74, subsection 1. Anyone other than Ravi want to answer this question? Okay, Ravi, you want to attempt?
Yes, sir. In case of first, 98% of the duty drawback is there.
Okay. See, actually, the question is what you are answering is for the second question.
Sorry.
Yeah.
Time limit is basically in this case re-export 2 years, sir.
Fantastic. So we write the detailed provision 2 years from what date till what date, let export order, etc. But very rightly said. And here, Ravi, we have one learning here that whenever we see the question, you might definitely know the answer, but please be careful, read the question twice and then attempt the answer. See,
sorry.
Yeah, correct. No, see, because you know both the answers, but you just saw re-exportation, you said the percentage of drawback. So Sonia, I say in exams, you might know everything, but please be careful, step by step. Don't get excited when you know everything. Step by step, each question attempt, right? Provision, analysis, conclusion, and then attempt your question one by one, right? So first, like Ravi rightly said, within 2 years, we have to export, right? So re-export in the sense. So basically, if I import something, I don't even use it. So I can export, but within 2 years to get 98% drawback. Second point was, what is the rate of drawback? That Ravi rightly said, it is 98% if I export without use within 2 years, right? Third question, is duty drawback allowed on re-export of wearing apparel without use? So they are saying, in this case, we discussed that if I re-export within 2 years, I get 98%, right? This question says, what about on wearing apparel? On apparel, wearing apparel, if you export without use, still do you get drawback? Whether this product is eligible for drawback. That's basically the intent of this question.
Sir, we can again use the same thing here also. If wearing apparel, if we are re-export, then same 98% drawback we can avail if the apparel is not used.
Okay, so let me twist the question now. That let's say the apparel is used, wearing apparel is used, then
no, sir, there will be no possibility of duty block, because if the apparel is used, then as per the section is saying that if anyone tested that material, that is also considered as a used. So in this case, if any SSC is used that wearing apparel, then there is no duty drawback is allowed.
you said one good point, very valid point, that if someone is doing testing also, then it is, fantastic, Ravi. Good. So you are adding a very good valued point when you are writing the answer. No one can stop you from scoring the maximum marks, right? Anyways, good. So Ravi, I want to twist this question further.
Yeah.
You said we are using this apparel. Okay. So there's no drawback. But what about section 74(2)? In that we say no, that if I use, let's say car is there, or let's say there's some machinery or there's some goods which I imported, I used it and then export it back, I get drawback. So under that section, cannot claim a lower rate of drawback?
No, sir. In that, I think that wearing apparel is not part of that. Jewelry or all those things are not part of that section.
Fantastic, Ravi. Right. So we have 4 products. Example, tea chest. So we have 2 products where if you use, no drawback, but if you re-export without use, you get a drawback. If you use it, then it does not qualify under section 74(2). Why? Because section 74(2), see, basically, let's say leave 1, 2, etc. Some might get confused. See, that section talks about that if you import certain product, that same product you export back. Okay, so only we call as re-export, because you import and send it back, those same goods. So we call the term not export, re-export. In this one section talks about that you export as such. That means either you use or don't use, but the same identical, the same goods as such, you are sending it back, right? In the same form, same. Machinery came, machinery went back. Car came, car went back. Any product came, went back. One is that you use the same product, use it and send it back. Next section talks about that you import certain materials. For example, I want to manufacture a laptop. A laptop might have 40 components. So I might import majority of the components, manufacture a laptop and then export it back. So that is also kind of a re-export. There also I get a drawback. But there, since we cannot identify what price I bought keypad, I bought these switches, I bought this screen, I bought this software, very difficult, right? So we cannot give drawback of the duty paid on import. So in that case, we have seen that in section 75, that on such products on the export FOB, on that price, they give you a drawback, percentage specified drawback. Why? Because very difficult to find out the pricing, the rates of various products which I'm importing, right? So this is basically a background of duty drawback. I hope now everyone is with me on the same page, right? So in section 74, they have said that if you're using a product and exporting it back, there are certain products where if you use and export, you don't get any drawback at all. One of them is wearing apparel. So wearing apparel without use, we can export. But if you get such question, you write answer. Because wearing apparel, you write the provision that wearing apparel, if it is without use, you get a drawback of 98%. But if it is used, then you don't get drawback at all. That also you have to mention there, right? See, the intention is the examiner should know that you know the entire provisions are relating to that question. That is our intention. The examiner should know, yes, Shweta knows it, Smruti knows it, Ravi knows the entire provision relating to this question. That's the intention, right? So you have to write the entire provision, then gives the conclusion, right?
Sir, one more point. Suppose any SSC import some goods and keep it in the custom bonded warehouse, and almost after 2 years, suppose there is no demand for that product. Earlier he thought that it will be sale, but after 2 or 3 years, there is no sale demand. So if SSC want to again means first time import, and then after 2.5 years he want to re-export, because at the time of import he keep it custom bonded warehouse and then re-export. So the same provision will apply, or it will not apply only
when we get the goods into custom bonded warehouse, we'll file a into bond bill of entry.
Yes.
And before ex-bond bill of entry, before paying any custom duties, if you re-export goods, then there is no problem at all. Why? Because you have not even paid custom duties. So you can do that. If the goods are stored in customs bonded warehouse, you have filed an into bond bill of entry, deposited in a customs bonded warehouse, paid those, executed the bond. Then before ex-bond, that means before clearance of customs bonded, you can re-export. There is no drawback. Why? Because you never paid any import duty as such.
Correct. And there is no difference. Suppose if we import and keep it in file a ex-bond bill of entry and then without use, then 2% will be deduct. If we keep it custom bonded warehouse, either way, suppose we have not paid any custom duty, then 2% cost we no need to incur.
Exactly. But practically what happens? No, generally people will not keep for 2 years. See, generally why people keep it? No, let's say example, I am MRF. Okay. So in my factory, I might have some shortage of space to keep the goods. So what I will do, sometimes I will deposit in customs bonded warehouse. I will clear it after 10 days, 15 days, 20 days. Once my dispatches keeps moving in so that I have space and I import it. Generally, people will not keep for so long until unless there is some dispute I am having with my exporter. So there might be some specific reason. One of the reason I've said a dispute. There can be some other reasons also. But generally, people will not keep for so long because I have to pay to my exporter, right? Despite paying my exporter, why I will not use my goods? So there have to be some peculiar reason why a person is not clearing for so much time. Generally, people will deposit and keep it for 15 days, 1 month, 20 days, etc. Because I'm paying charges also, no, for that warehouse. So it is
Yes.
very costly for me. But people generally do that. Why? Because I might have some shortage of space in my factory, or from the customs bonded warehouse, I can split that goods and send to some of my factory, this factory, that factory, Mumbai, Kerala. So from that, I can dispatch and plan my production, my movement. So various reasons people will store in customs bonded warehouse. One of the major reason what I've seen practically is people generally do that because of shortage of space in the factory. Because a lot of raw materials coming in, a lot of production orders I have, and if everything comes in my factory, where do I store all these? So generally, for convenience sake, people generally store in customs bonded warehouse and they clear it. Because even if I store outside warehouse, I will have to still pay charges, right? So as well I pay there itself when I postpone my duty also, and I clear the duty and bring it when I have to actually use the goods.
Yeah. And after 90 days, there is a significant 15% rate of interest also need to pay.
True. So the last answer for this third question is yes, duty drawback is allowed when wearing apparels are re-exported without being used. As I said, because if you import and re-export without use certain products like tea, chest, wearing apparels, food products, no problem. You get duty drawback. But these products, if you use it, then there is no drawback. However, notification 19 as amended provides that if a wearing apparels have been used after their importation into India, drawback of import duty paid thereon shall not be allowed when they are exported out of it. Right? We go to the next question. Times Graphics Limited has imported a machine from its holding company in Japan on 12th of January 2021 after paying customs duty of 15 lakhs for use in its factory and is re-exported on 10th October 2021. So Times Graphic imported a machinery for production on 12th January. They paid custom duty also 15 lakh rupees. But they re-exported it for its use in the factory. So they used it and they and they re-exported on 10th of October. It says you are required to advise Times Graphics regarding duty drawback that will be available to the company when it sends back the machinery to its holding company after completion of the project. So they imported a machinery for the project, they did production, they used it, the project was over, and after a few months on 10th October, they exported it back. Question simple. Question is simple. What? Whether are you eligible for drawback? If yes, how much? Except Ravi, do anyone wants to answer? Because already we have discussed majorly the provisions of this section. Anyone wants to attempt? Okay, Ravi, you want to?
Yeah, sir. In this case, sir, if SSC use that machinery, and the provision is saying that first, if the SSC used from that date, like import date to export date, if the within 3 months, then 95% is the rate of duty, and after 3 to 6, between the 6 months, then 85. And here, this will come in the third bucket, which is 75%.
Fantastic.
And one more thing, whatever the duty rate, the time period basically applicable based on the import date, not for the particular quarter, like January to March, it will not affect. It will impact based on the date of import, basically month of the import to next 3 months.
Fantastic, Ravi. So I think you highlighted all the provisions. And I want to ask one more question.
Yes, sir.
Ravi, so let's say example, this 15 lakhs consist of example, let's say 3 lakhs basic custom duty
Yeah.
Then that basic custom duty drawback also we get 98%.
Yes, sir. Basic custom duty drawback is also we will get.
Fantastic, Ravi. So I just wanted to twist the question. Anyways, so you are very clear on your provision. So
other than IGST, I think other than IGST, we will get the duty drawback.
That's what. So we will get duty drawback basically. Yeah. So basically, see the drawback intention, as I said, intention is when you import, you have incurred certain cost. That cost they want to give you back. Why? Because you are exporting it back out of the country. See, you imported certain goods you want to use in India, so you paid customs. But when you're sending it back, government wants to give you back majority portion of the drawback based on the period of usage. So in 98% you're getting, you get on majority of the duties, even basic custom duty also. So since in the given case the imported goods have been used for more than 6 months, but not more than 9 months. If you see here, 9 months is not completed. So it is 6 to 9 months. Before re-exportation, 75% of the import duty shall be allowed as drawback. Thus, the amount of drawback available to Times Graphic is 15 lakh rupees into 75%, which is 11 lakh 25 rupees. So 75% of the drawback, they're getting it back. See that those section 75, this is the next section where you use it and send it back. 74 was without use, you send it back. So here you remember easily, you can remember in the sense it has multiple of 3 months, up to 3 months, 3 to 6, 6 to 9, 9 to 12, 12 to 15, 15 to 18, above 18. So it is multiple of 3 months, you can easily remember. You not even remember, it's a simple concept. The rates alone you will have to remember, 95, 85, 75, etc. Like this. Okay. So it comes to the third category, like Ravi rightly said, 3, 3 to 6, 6 to 9. So easily you can remember percentage wise. So 75% you are getting it. This percentage you will have to definitely remember. Why? If you get a question like this, you will have to work out the answer. But as I said, please write the provision. Why? Because in case you go wrong in your percentage also, if you write the provision, at least you can fetch certain marks. Many students fail because of 1 mark, 1.5, 2 marks. So each and every mark is important. So only I always say, please write provisions even if you know the answer. Then attempt. Next, Acme sales imports were being provisionally assessed pending a verification that the department was carrying out. So Acme sales were doing imports. Upon completion of the verification, the assessments were finalized. So there was a provisional assessment going on and they finalized the assessment order and gave an order. And Acme sales was asked to pay 12 lakh rupees, which it paid. So the departmental authorities gave an assessment order, final assessment order, asked them to pay 12 lakh rupees. After 6 months, upon detailed scrutiny of the verification report by the department, that means from the department they got it. So Acme sales did a detailed verification scrutiny and they took a legal opinion and they found that it was not payable. So they filed a claim for refund of 8 lakhs out of that, because they felt that only 4 lakhs was payable. There was a factual error on the verification report. So they felt that after 12 lakhs, only 4 lakhs was actually payable, but by mistake we paid entire 12 lakhs. Why? Because the department gave an order. So they applied a refund of 8 lakhs and 4 lakhs they felt was payable. So was this, the question is, was this the correct mode of redressal of this problem by Acme sales? What will be the likely outcome of the claim, and discuss on the basis of case laws on the subject. This provision also we have discussed during our session. Anyways, there's a judgment also, that also we'll see. Anyone wants to? Okay. So if you see here, there is basically a hierarchy through which we have to go through the legal action. Once the department has passed an order, against that order, if I do not agree something, I cannot just file a refund. It's an order passed by a departmental authority, here a custom authority. I cannot as such pay, no, it was not payable, I claim refund. No. If I'm against that, I will have to go to the appeal process. I cannot just say that, no, it was not payable, no, I claim refund. Refund cannot be applied as such. Refund provisions are there. We have refund chapter. We have discussed all the provisions of refund, whether it's GST or customs, that in what situations where you can apply refund. As such, if I felt I paid more because there was an order, I cannot apply refund, because that order is given by department authority stating you are liable to pay. If you feel that it was not liable to pay, you have to justify. For that, you will have to file appeal and justify your provisions, your stand that why it was not payable. Just you think that no, it was not payable, so I will claim refund. It is not permitted as such. The same was held by judgment also, a Supreme Court judgment in case of Priya Blue Industries. Let's see. So Acme Sales received an order finalizing provisional assessment on the basis of a verification report and requiring payment of 12 lakhs. They did not contest this order but made the payment and allowed the appeal period of 60 days to lapse. After appeal became time barred, they filed a claim for refund in which they challenged the order. This was a backdoor method of seeking relief against order. It also asked an officer of the same rank to review the order passed, and it sought to bypass the time limitation for appeal by presenting the appeal as claim of refund. The Supreme Court has held that in case of Viaplu Industries, that such a refund claim is not permissible for all these reasons. A person who is aggrieved with an assessment order cannot seek refund without filing an appeal against the assessment order. If you win the assessment order, it's fine. But once the department has said that you are liable to pay, they have passed an order against you, how can you say that I will go and file a refund? Practically impossible. You will have to go for an appeal process. Whatever be the error, you have to go for appeal, justify your stand, win the case, and then probably you can apply refund, but not as such. The same was said by the judgment in Supreme Court, High Court. Now you might think that it was a very obvious issue. Why this went to Supreme Court? See, because the intention here was there was a clerical error, there was a computation error. Certain thing which is very evident. Okay, see, certain thing there is dispute in the law, there is some understanding on the law which is different from the SSC and the government official, department official, they would have passed an order. But here there was a clerical error, like we have discussed. If there is some clerical error, you can get it revised, but the time limit is also lapsed. In that case, still can I still file a refund or should go appeal? The Supreme Court said you have to still follow the process. Once there's a wrong order, you either get it revised. If the time limit is lapsed for revising it, then the only option is you have to go through the appeal process. Although there's a factual error or a clerical error, you cannot as such go and file a refund claim. Very valid, completely agreed, right? So it is a question, simple question basically, but there's a Supreme Court judgment also. Next question. Rishabh Traders is engaged in trading of cast iron molds. It imported a total of 600 units of cast iron molds into consignments of 200 and 400 units, which has been valued at rupees 1,500 per unit. The customs duty on the imported molds has been assessed at rupees 250 per unit. So please note here that on unit base, they were liable to pay custom duty. So per unit duty payable was 250 rupees. The costing was 1,500 rupees, right? Rishabh Traders sells the molds for rupees 2,030 after adding a profit margin of 280 per unit. So fact of the question is, he imports a unit for 1,500. 250 is the cost of custom duty. So 1,750 is the cost, landing cost. 1,750, he adds 280 rupees profit margin and 2,030 is the sale price. So his profit margin fixed at 280 per unit across. Clear? Next part of the question. After 1 month of selling the entire consignment of cast and molds, Rishabh Traders found that there was an error in payment of amount of duty, in which duty for the consignment of 200 units was paid as if it was 400 units. Since he had two consignment, 200, 400. For the 200 also, by mistake, he paid for 400 units, 400 into 150. So 250, 400 into 250, resulting in excess payment of duty. Rishabh Traders files an application for refund for rupees 50,000 rupees, 200 into 250. You are required to determine whether the unjust enrichment is attracted in the given case. Now, first, anyone can tell me what is unjust enrichment? Can anyone highlight logically, not strictly as per the provision, logically also if you explain, it's okay. What is unjust enrichment?
Sir, unjust enrichment is basically if any person, suppose in this case itself, if the importer, like he imports 600 pieces, and whatever the duty, suppose he paid excess duty, instead of 250, suppose if he imports 600 units, and instead of 250, which is the applicable duty, he paid 300 rupees duty, and the same duty he apply in their costing, instead of 230, he add the whatever the different duty and recover from the customer. Then he will not able to claim that duty from the department. Customer can claim that duty. This is called a unjust enrichment. If he is claiming, then it's a kind of unjust enrichment. But in this case, he wrongly mentioned that instead of 600 quantity, he mentioned that 800 quantity, 200 extra quantity, and on that 250 is extra paid. So in this case, it is clearly mentioned, reflect that he cannot pass that burden to any other person because he import only 600 cases and paid 800 cases. So in this case, he can avail that difference duty, which is 200 into 250 per case. So
Fantastic,
this is my
Ravi.
view.
Really surprised that you have explained in detail the provision and also the answer. Guys, so as completely rightly explained and told by Ravi, unjust enrichment is basically, see, enrichment, unjust enrichment. See the wordings that you are unjustly enriched here. So basically, see, you should not get dual benefit because it is unjust, right? See, because this 250 rupees per unit you paid extra, right, for 200 units. That cost, if you recover from your customer, so your costing is recovered, and then you say I want refund also, so you're getting dual benefit from the government, right? See, one, you are saying I paid excess tax, you want to claim refund, okay, but the same costing you have even collected from the customer also, so you are getting 2 times benefit for the excess tax paid, right? So, which is completely wrong, logically also it's wrong, right? So that we call as, that is termed as unjust enrichment in indirect tax laws. Earlier the same concept was there in simple excise, so the same concept is there in GST or customs, etc. So now this is the provision. So coming to a question here, if you see, Rishabh Traders has recovered only 2030 per unit. That 250 per unit which he has paid extra 200 units, he has not recovered from the customers. So he has not recovered that extra paid from the customers. See, because facts, if you see, his per unit price is fixed at 2030. 280 is margin fixed, 250 is cost is fixed towards duty, and he has recovered only 2030 per unit from the customers. So the 250 rupees per unit which he paid extra for 200 units, he has not recovered from the customers at all. If in case on those 200 units, if he would have charged 2030 plus more 250 rupees, then he cannot claim refund because it is unjust enrichment. But here he has not recovered that extra duty at all. Sorry. So in this given case, it is not unjust enrichment, so he can definitely claim refund. This claim on him is false. So there is no unjust enrichment here. He can definitely go and claim refund because he has not recovered that cost from the customers. So as per section 27 of the Customs Act, the importer or the agent of the buyer who has been charged duty by the importer has to establish that he has not passed the burden of duty to another person in order to be given refund. As we discussed that, he should prove that he has not passed that burden of the costing to the customer recovered from him. If he is able to prove, then yes, he can claim refund, because when he claims refund, he will have to substantiate this fact to the customs officer also for getting this refund. Otherwise, the refund amount is credited to the consumer welfare fund. It is not given to him. So first provision, proviso to the section 27.2 says, provides that the amount of refund shall be paid to the applicant instead of being credited to the refund, where such cases amount is relatable to the duty paid by the importer exporter if he had not passed on the incidence of duty interest to any other person, and in case where such amount is relatable to any duty paid in excess by the importer before an order permitting clearance of consumption made, where such payment of duty is evident from the bill of entry in case of self-assessed bill of entry. Rishabh Traders invoice establishes that it collected 250 per unit only on 600 units of mold. However, so he has not collected that extra duty paid at all from the customer. However, it paid the extra duty of 200 molds. This payment in the normal course was made before the order permitting clearance of duty goods, and hence excess payment of 200 units would be evident from the bill of entry. Thus, Rishabh Traders case falls within the exceptions to unjust enrichment. Thus, it will be able to refute the charge of unjust enrichment and claim this refund. So now we come to the last question on SCIS scheme, right? Service exports from India scheme. Now, can anyone tell me that MEIS scheme, is it applicable for your May 2022 exams? MEIS.
Yes, sir. Yes, I think yes.
So basically, MEIS scheme is not applicable, and there is a new scheme which is RODTEP that will be applicable for your exams for May.
Okay, sir.
Okay, so we will have to go through RODTEP scheme, which will be there in amendments, where we'll have to understand that scheme and understand properly, because that will be applicable for exams. SEIS scheme is not applicable. Right? Now, so can anyone tell me what is this SEIS scheme?
It's basically service sector. If any company is exporting any service, and if the individual, and there is an individual or some AOP plus company, there are two categories. And if they are exporting any service and the net revenue is more than 10,000 or some 15,000, then they are able to eligible of duty, this benefit. They will claim this benefit.
So basically, fantastic, Ravi. So these are basically scripts you get, which you can use against import, or you can sell it also. There are traders who buy and sell scripts, MEIS scripts, SEIS scripts, etc. So this is basically what Ravi said is service exports from India scheme, SEIS scheme, because government wants to promote exports out of the country. So if you export services out of the country or you export goods, government gives you benefits. So in case of service exports, you get a script which is called as SEIS scheme, right? But it has certain conditions that minimum net foreign exchange you should get more than 10,000 in case of individuals, and others in case you should get more than 15,000. You should calculate net foreign exchange. It should be a notified service. Let's say what service you've done. It should not be salary income, etc. Right? So it should be an eligible income. You should have an active IEC code. So there are certain conditions and provisions given. But yes, in a nutshell, this is the concept of SEIS scheme. Let's see what the question says. Mr. Raj has received $12,500 as consideration for the services provided during the year. He is also paid $3,000 towards services received from abroad. So he provided some service outside the country. So he got $12,500. In turn, he paid $3,000 to his suppliers outside the country from where he received service. So purchase sale. He has also received $4,000 towards employment rendered abroad during the year. I think let's cover one by one. So first question, anyone wants to answer?
Yes, sir. In this case, if we if we review the service, the net impact of the service, 12,500 minus 3,000, which is a 9,500, and Raj is an individual, then at least minimum service for claiming this script benefit, then Raj should get the net benefit of 10,000 USD. But net benefit or net revenue import in India, which is 9,500, then he is not eligible. And
So
regarding
you don't want to add $4,000.
4,000, regarding 4,000, these are not related to the service related category. These are the outside service. Then this amount will not consider for that.
Fantastic, Ravi. So I think you've verbatim answered the question. One second. Just 1 second. Now there's I need to just plug in the charger once. Yeah. So as rightly said by Ravi, if you see here, as I said in the beginning, the net foreign exchange is important here. Net foreign exchange should be more than 10,000 if I want to be eligible for these SEIS scripts. So for small service exports, there is no refund or there is no script available, eligible, right? So here, if you see, net foreign exchange is what I receive minus what I pay. So I received 12,500, but 3,500 has gone out of the country again. So net foreign exchange, what the country has earned is 9,500. And since it is below 10,000, Mr. Raj is not eligible for SEIS scripts here. Now, what about this 4,000? Like Ravi rightly said, this is not a notified service at all. This is basically an employment for service, for salary income. So this is not a notified service eligible under SEIS scheme. So it is not eligible for SEIS scheme, right? Let's see the next question. Services Limited received the USD $16,000 as foreign exchange during the year towards share capital. Whether eligible or not eligible?
No, sir. This is not a specified service.
Fantastic, because question I think is very clear. It's towards share capital. So they've raised shares, share capital. They have received subscription from abroad, and they've issued shares because it's share capital. It's not a notified service at all. So obviously it is not eligible. Very simple question. Next. Mrs. Anita has received $15,000 in consideration for services provided during the year. Assume that except for in case 3 above, others have an active IEC. Yeah. So anyone wants to answer the third question? Anita's answer.
Sir, in this case, IEC need to be active. This is the out of 4 or 5 conditions. This is the one important condition. IEC should be active IEC.
Fantastic. So rightly said by Ravi. If you see, I also in the beginning I told you when I was talking about SEIS scheme. Now when I reading the question, I told you that there should be an active IEC also. So here, although Mrs. Anita has a net foreign exchange of more than 10,000, she was eligible, but because she does not have an active IEC, she will not be eligible. So in the answer, when you're attempting the answer, you write that since it is more than 10,000, she is eligible, but however, another condition of active IEC is not fulfilled, hence she will not be eligible to claim SEIS.
One more thing, without active import-export code, is Anita able to export the service?
Yeah. See, why they are able to export is, see, Ravi, practically what I've seen is people even do export of service without having an even IEC number itself. Because see, what happens is when I export goods, I have an IEC code. I have mandatory because it will move through customs. But in case of service, since it's all online or I just render it, there is no physical movement, people do it. When the money comes in and when they try to withdraw the money at that time, many bankers question that where is your IEC code?
Yeah.
That time people realize, oh, I need to have an IEC code. So many people are not even aware. And some people have an IEC, but it is not active.
So, sir, in this case, suppose if she is not having an IEC code or not active, then whether she can withdraw this money from the bank without...
See, it depends on banker to banker. Many banks will not allow her to withdraw. So it depends on banks how strict or how clear their policies are. So it depends on bank to bank whether they will allow her or not. So only I said the majority are forced to have an IEC number. Why? Because they are unable to withdraw their money.
Correct, sir. Otherwise, bank will not allow.
Exactly. So that is one of the trigger where they are getting hit by this IEC. They will have to get an IEC number to because its service is as such intangible. So I as such don't need anyone's permission to provide a service. But when you talk about GST, whether a service export has an IEC or not, there's no link with GST. GST, it is still a zero-rated supply. So I can still export service without an IEC and it will still treat it as a zero-rated supply because GST has no link with IEC code.
Correct, sir.
So as we discussed the first case, before we come to the provisions, basically to entitle SEIS scripts, the service provider must be in India. It must provide only notified services. It must have an active IEC number. And where an individual service provider sole proprietorship should have minimum net foreign exchange of $10,000 and other service providers should have minimum of $15,000. So these are basic provisions. So if you get a question, please write these basic provisions and then analyze and conclude the answer. So first case, we discussed that 12,500 minus 3,500 net foreign exchange is below 10,000. So it's not eligible, and employment from abroad we will not be related to service sector. So it's not includable. Therefore, Mr. Raj is not eligible. Second question, we saw that since it was share capital, it's not a notified service. It's not for rendering service at all. So it is not eligible. And third question, we discussed that since Anita does not have an active IEC, she is not eligible for SEIS scripts. Right? So we have discussed the provisions in detail of SEIS and these were the answers. Yes, so with this, we come to the conclusion of this session. We've discussed all these questions with the provisions.